Hi there, traders. We're waiting for several minutes, and we are starting today educational stream. Checking for the sound and the picture. While we are waiting for the other participants, I remind you that in the description under this video you will find all the necessary resources to become a professional trader. Especially it's relevant if you are beginners, and you will find the link for the absolutely free course that is well structured, in fact. Okay, let's start. I hope you are closing the trading week in profit. And today we have educational stream. We are talking about the volumes, horizontal, vertical, and the special tool, lazy scalp board indicator for evaluation of daily volumes. I'm almost sure you already heard about this indicator, and today we will talk in details about this. There is a high relevance for beginners in all these topics, and especially for those who are starting their way in trading. So let's start. Why we pay attention to volumes? And the answer is simple. We evaluate the amount of the capital engaged in an instrument using volumes. We also evaluate the volatility of the instrument, and both parameters are extremely crucial for scalping, because in scalping we should really have a clear analytical information about all the volumes, because without volumes we have no volatility. With no volatility we have no potential, no movements with high potential. For example, when trading breakouts, we should be sure that there is enough volume in the instrument to provide significant breakout, to provide significant pool of liquidity to have a breakout. And let's start with from simple things, vertical volumes. Here you see the vertical volumes. Vertical ones show the degree of interest of the players, namely the number of contracts or transactions for a certain period of time. As you see here, we see the time scale. Here we see the price scale, and this is the core differentiating factor between horizontal levels pinned to different price level and vertical volumes pegged to the time. And in this case, in case of vertical volume, the vertical volume doesn't tie to price levels. And when we are talking about market profile or horizontal levels, the principle is absolutely the same, like this. It indicates the zones in which the price is spent 70% of the time during the trading day, or it shows the maximum volume within small zones. So what are the differences in use? Using vertical volumes measurement, we can correctly identify the levels. Let's watch the BTC example. When the price comes to a level, there is an increase of volumes. Or if we have a drastic movement or impulse, we can make sure whether it continues or there is a decrease of the interest and potential correction on the way. According to the first aspect, we see that every time price approaches to the level. We see quite accurate levels, and every time we are about around the level, we see higher than average volumes. Here as well we have higher than average volumes. In this case we can correctly identify strong levels. According the huge impulses, here we see huge impulse accompanied with a very huge volume. In this case, after this impulse ended, we see the decrease of average volumes and the predominance of green volumes. It means that there was the one-time action, and then all this movement was bought out. It's extremely important to understand. What can we see by knowing this fact? It will be stupid to think that, for example, in this point, after such breakout outflow of sellers volume, it will be a mistake to think that the movement will continue, because there was short outbreak of such volume, and then it went down. By that fact, we understand that there is no way that this instrument will be probably bought out, and the price rolls in back immediately. Okay, for example, using market profile or horizontal levels like this, we can identify the maximum volume of contracts executed within a certain zone. Here you see the consolidation. We set up this tool within the borders of this consolidation. We spot out this zone, waiting for the price to get back into this zone to get the pullback from this zone, because here we have the market profile level at the maximum volume of huge buyer. Usually a pullback is being made from this area, from the middle of the zone, from the very point where the maximum volume inside this diapason is registered. Such an instrument helps us to identify this maximum volume and work out different pullbacks. I think that's clear about the difference between horizontal levels and horizontal volumes and vertical volumes. If you manage to combine these two tools inside your analysis, it will be even more efficient. And now the last element of today's stream, lazy scalp indicator. Let's find it. It looks like only four parameters here. How to find it? I think you know, but for those who don't know, I will show you. Daily scalp board. Sorry. Let's find it there. What's the scalp board? Here we add it, and I do not recommend changing some inputs. We left the default settings, and there are four main parameters. The first parameter, daily volume, that is extremely important for each instrument. The heavy instrument, Bitcoin and Ethereum, is a one story. The altcoins, other altcoins, is another story. We'll talk about this later. Then average volume, Nether, it reflects the extent of volatility. And finally, the correlation with the BTC. As far as we are talking about the BTC, the correlation is 1. The higher is the correlation, for example, 0.99. The higher the instrument is pegged to the BTC, in more extent it follows the BTC. Okay, what can we conclude, and what interesting and important information can we extract from this indicator? The very first parameter, daily volume, should be no less than 200 millions in any altcoin if we are talking about short breakouts. If we have a clear consolidation, several touch to the level, and we are expecting the short breakout, the price will follow, will fall. But if the daily volume is less than $200 million, probably the breakout will be false or very, very small, very silly and very, very greedy. The higher this volume, the higher probability of the breakout. For long breakout, we should register even more volume. For example, we are waiting for the long breakout. In the altcoins, we should be sure that there is more than $300 million daily volume. In this case, that's enough. For example, if we are waiting for the long breakout. For any breakout, long or short, this volume will be enough. The average volume is very dynamic parameter. I have already showed you that it reflects the volatility. It measures the volatility inside several past 1 minute candles. And finally, here we have, for example, waves. We have negative correlation with the Bitcoin. And sometimes it's good because trading the instruments with negative correlation gives us the opportunity to trade the instrument with very small oversight after the BTC. That's enough, I think. We talked about the three elements: horizontal levels, vertical volumes, vertical volumes, and lazy scalp board indicator, volumes indicator. I think now it's clear. That's quite simple to use, and I really hope it will enhance your trading quality. Don't forget to subscribe for C-Scalp trading channel, free signal C-Scalp channel, and the course. The course will help you to structure all your knowledge and then to successfully apply all this knowledge in your trading. If you have some questions, please ask in the comments below or in the comments under the educational video that we are launching and releasing. Thank you for your attention. That's all for today. See you soon.